All right, good evening. Welcome, everybody. Tonight, you'll get John Carter's game plan for day trading the Fed rate cuts. While most traders see a volatile, choppy market, John sees one of the best trading opportunities in years. In this live demo, he'll reveal the exact tools he uses to spot high probability setups, the single market internal he checks before every trade, and how to sidestep the post rate cut trap that takes out most traders. John's been a full time trader since 1996. He's the best selling author of Mastering the Trade and the creator of the Squeeze Indicator, used by traders all over the world. Get ready because John's about to show you how he's trading this historic volatility live. All right, well, the stage is set, the technology is working, the floor is all yours, Mr. Carter. Please take it away.
Awesome. Thank you, Daryl. Everybody, I will turn off this camera in a moment. I think it's always good to see that there's real things happening um, behind the scenes and all that kind of fun stuff. And happy Thursday. I know the Yankees are playing. We will get this thing rocking and rolling and get it going quickly. And let's see here. All right. Is that Picasso boxing? Yeah, no, it's an interesting work of art, right? I go back and forth. I think that it is kind of good for, traders. Sometimes you're fighting with the market, but philosophically do you want to go a little bit, maybe go with the flow? So maybe it's time to replace that with a river. All right, so we're just going to dive into this. If you were here for last week, there's a lot of kind of new information that's come out over the last week, which I'm super excited to share. And then if you have no idea what this is about, I still have got enough basic information from last week so that you can kind of see and understand what this is. This is one of those things where, it's rare to kind of come along and find something that's like, oh my God, this is kind of a missing piece of, in this case, the day trading puzzle. And it's not always like that. Sometimes, there's tools, sometimes someone brought up a great question last time. It's like, well, you got the squeeze, you got the RAF, and now this, what am I supposed to do? Well, there are some tools that are great for swing trading, and the squeeze and the RAF Pro are examples of that. But what I'm going to talk about tonight is really more just kind of really focused on day trading. And it doesn't mean that you have to be a scalper or anything like that. It could be as simple as, possibly you've got swing trades that you want to monitor. Like, should I get out of them today? Like, is this a really serious day to the downside? Or you're just looking to kind of catch a little income while you're watching your swing trades, all the fun stuff. So I am primarily a swing trader, but I typically like to do a couple of day trades a day. But the most important thing is that there's those 1, 2, or 3 days a quarter where the S&Ps are up 100 points or down 100 points, the Nasdaq's up 4 or 5, down 400. And if you can nail those days, you'll have the best trading year of your life. If you miss those days or screw up those days, you're going to be struggling all year, and that's really what it comes down to. Disclosure, of course, I always say don't sell naked calls, even if you think it's a good idea. Always with options, doing debits or fixed risk is always the way to go. And selling naked options really is for pros, and even pros typically do it as spreads. Okay, so that's the nutshell of what we're going to talk about. So let's go through a little background, and then I want to I always like to say a picture is worth 1,000 words and all that kind of fun stuff. So let's dive into this. Um, so as I was saying, sometimes now I do want to emphasize that I have three portfolios that I trade, and there's day trading, and there's swing trading, and then there's position trading. So position trading, we're not going to be, none of this applies to position trading. So this is something like you bought a stock, you're planning to be in it for years. Okay, you're putting money into an index fund. Okay, so don't worry about that. Now this does apply to swing trading a little bit, because let's say that you've got a lot of longs on and there's a walk down day. Well, you kind of want to cut those loose on those days, because those, if you're, that's just a day where, say they're getting to your stop, and sometimes add to positions because you know the market's going, the market trends up. These are the kind of days where if you do that, you will get your face handed to you and your spouse will be very upset at you. And so at the very least, you can recognize that that's kind of a day. Okay. But most importantly, it's really just being able to recognize the day and what kind of day it is. And of course, a lot of times the days are going to be kind of choppy and they're going to trade within a range. And it's actually important to understand that too. We don't want to project that we think it's going to be a 100-point day and it's only a 10-point day. But the most important thing with this stuff is really being able to understand what those rare big days look like. And we want to be able to recognize those right away. Now, all that being said, we also found a couple of cool things that have to do with the Mag 7 specifically, and this is kind of exciting, which we'll talk about, but also utilizing the same tool on your favorite stocks like Tesla, etc. Okay, so that part's kind of new and it's kind of cool. Thanks, Lorna, for diving in and figuring that out because I honestly didn't even think that could be done. So that's pretty cool. All right, so let's start off talking about walk up, walk down days. They're of course super easy to see in hindsight. And that's what happens is, you get right now the market's just kind of drifting up and that's great. And, one day we're going to wake up and there's going to be a 150-point down day. Okay. We don't know what day that's going to be. And we don't want to be positioned for that day because we don't, that's also kind of a waste of time. But on the day it's happening, we want to recognize it, take advantage of it, do all the things. And of course, the same thing on the upside. So I think the worst thing here, and I've found this, that really when I go back and look, at my trading results over the years, the best years are I nailed those big days. Meaning, like if there was a big day, I pressed it. I was long and I added to my longs. I didn't get out too early, all that kind of stuff too. And so, again, it's just having tools that recognize that because when it's happening, it's kind of hard to understand that is this really happening or is it not happening? So, so that's what we want to look at. So when I talk about a walk up or walk down day, typically that means about a 2% move or more in the SPX or the NDX. So a 2% move for a long time used to be around 100 points. At 6,000, it moves up to 120 points. Now we're barking at 7,000, right? So then that becomes even higher. And then of course Nasdaq 24,000, a 2% move is 480 points, et cetera, et cetera. So now you can kind of get a sense of the point moves. So the other thing about this is that if an index is moving 2%, our favorite stocks are typically moving 5% or more. So there's a lot of opportunity, especially with options on days like that where they have those moves. Okay. The other thing about this, I think it's really important to understand, is that when you get that gap up, okay. Now, I kind of have a traders always kind of have I don't know, maybe a sick sense of humor, or maybe it's just my genetics. But some of my favorite days are when you get a big gap up and it just turns into a route to the downside. Now, it's a favorite day if I'm prepared for that because it gaps up. Maybe you're selling your longs. You start to recognize it's rolling over. You buy some cheap out of the money puts and you're just like, oh my God, you just ride it all the way down. And that's fantastic. But conversely, um, conversely, I also like it when you get a gap down and instead of actually going down all day, you reverse and have this huge move higher. So all these things are in play here that we're looking at. And the main thing is you want tools to help you recognize it when it's happening, because it's certainly easy to see when it's over. And then you can sit there and ruminate over all the things you could have done, but you didn't do, right? So that's the whole idea of this. So at the end of the day, it is so important to understand when this is happening. And it's literally a day that can make or break you depending on whether or not you are grasping and acting on what is happening. All right. So that's the kind of stuff we're looking at here. The other part of this, though, is that the reality of it is this is not happening most of the time. And we're going to either have these big 2% moves, or there's going to be these days when we trade like in a 0.5% range. And these are equally as important to understand when this is happening, because you can make a nice living selling spreads, especially 0DTE, SPX or NDX or SPY, et cetera, in this type of a market. This is great for iron condors, iron flies, and man, it pays the bills. But you don't want to do an iron fly or an iron condor on a day when it's doing this. Okay. And so again, it's just as important to recognize real time When it's this kind of a day, um, just as it's important to recognize real time when it's this kind of a day. Okay. Oh, the Cubs won. Very nice. Yeah, we'll look at meta too. Go Cubs. Um, all right, so that's what we're looking at there too. So essentially owning the quiet markets, not lamenting the quiet markets. Nothing's moving here. Recognizing that it's a quiet market and taking advantage of strategies where you can milk those quiet markets is, it's a great way to make a living. It's kind of a low stress way to make a living. So, again, doesn't matter what the market's doing, what it's throwing at us. We want the ability to recognize it, what's happening right away, versus at the end of the day saying, oh my God, what a move. I can't believe I missed it. And then if you are, sometimes I think the worst thing is that you get into this great habit of making money on these quiet days, and then when the big freight train day comes along, you don't recognize it, and you're still sitting there trying to sell iron flies, and not only are you losing money on that day, but you're absolutely fighting a huge day that could turn into a big benefit for your bottom line had you taken advantage of it. So an example, these are two back-to-back big days. Big move down in the S&Ps, like a 357-point move. And then over here, there's a 500-point move. So it's good to look at the extremes like that and understand. And now you might first ask, okay, well, what about the squeeze and what about the RAF Pro? Okay, look, these are not designed to catch this kind of a violence in the markets. Okay. These are designed especially for swing trading, where you've got this nice consolidation, you've got this nice normal ebb and flow. This is violence that's happening in the market. Violence meaning that there's moves that are happening that are typically that are over 2%. People are getting blown out of positions and there's panic. And you want a tool that actually can understand and interpret violence for you. Okay. um, Quant pivots that are great, but they're designed for the 95% of the time when the markets are contained within a normal range. Okay. That 5% of the time when it's a freight train or something like that, the quant pivots are not going, they're going to tell you, like, oh my God, this is going, but couldn't we know that before that is happening? And is really what the crux of the issue is here. Voodoo lines, I love them. On a day like this, they're barely resting points. Okay. Barely resting points. So again, you want to understand these are great 95% of the time. It's that 5% of the time that things like that go crazy. What about the Momo tools? Actually work pretty good in a situation like this. I do see on days like this though, where the reversal signals don't work. Okay. And so that's kind of a red flag. So I want to know that this is a walk down day, so I don't get caught up in trying to, like, oh, these are reversals on the Momo, which work most of the time, and they just flat out don't work on a day like this. So there's key indicators and tools. They're just designed for different types of situations. Okay, so a lot of the stable indicators that we like, the squeeze, the RAF, the voodoo lines, they're really designed for kind of normal back and forth, which is what happens most of the time, which is great. And so part of this is identifying those kind of fewer moments in time when there's extreme things happening. Okay. Now, so what are we going to use with this? And the key with this is we want to understand internals. Now, there's a lot of internals that we can use for this. I'm a fan of the VIX. I'm a fan of the advanced decline line, up volume versus down volume, put call ratio, and so on. And they're all useful, and I absolutely watch them. But there's only one that truly tells you what is happening right here, right now, in terms of the type of buying or selling pressure and the intensity with which it's happening, and that's the tick. Now, if you don't know what the tick is typically used as a reading on the NYSE. That's the New York Stock Exchange. It is calculated by counting all NYSE stocks making an uptick. And what an uptick is, it means that the stock just traded at a price higher than the previous trade. Okay. If it trades at the same price, then that tick reading is zero. If it trades at a higher price than previous, then it's like a +1. And then if it trades at a lower price, it's -1. Okay. And then you have 3,000 stocks all doing this, and then you're getting a reading. So if there are 3,000 stocks and 2,000 of them just ticked up and made a new high, and 1,000 of them ticked down, the net reading would be +1,000. Okay, and that's on the NYSE. So you can also get tick readings on the NDX, the SPX, etc. And this is very useful in just seeing when there are extreme readings out there and when there's quiet action and nothing is happening. And the tick by itself is actually a useful tool for doing that. So the tick by itself is useful. The main flaw in it, because I've watched this thing for 15, I've probably put 15,000 hours into this thing, is that, just because you get a plus 1,000 reading doesn't mean it's going to stay that way. Okay. Or if we get a minus 1,000 reading, it doesn't mean that the market is just going to fall all day long. So the tick is typically all over the place all throughout the trading day. All right. So the question then is, how do we use it and how do we quantify it? So here's some action. This is a pretty volatile day. You got a big move down, reversal, et cetera, et cetera. And if you look at the ticks here, the ticks are basically all over the place. They're up, they're down, they're extreme, they're not extreme. And when you look at this, it really doesn't give you a lot of useful information in terms of a trend or anything like that. And so I think that's the first thing just to kind of understand. It's interesting that right here you almost got plus 1,000, but the market's just kind of trading sideways, right? Not super interesting. So that's what the tick is, and that's the symbol, cash sign TICK, for the NYSE tick. Yeah, it used to be like 3,000. Now it's less. There's so many companies have just decided to go private, or they gotten taken over, et cetera, et cetera. So I've watched this, and the reason I really like the tick is that a lot of indicators actually react to price, and the tick really drives price. And consistent high readings in the tick, you're going to see follow through to the upside. Consistent low readings in the tick, you're going to see follow through to the downside. And I personally can't imagine trading without the ticks. But it's really not about how high or low they go. It's not really about the extremes. It's learning to read the nuances of the tick. Where do they spend a lot of their time? What indicates a power move? What indicates light buying? What indicates heavy buying or heavy selling? What indicates persistence? Is there a way to read it that we can see that the institutions are doing something persistently? Because if they're persistent about their buying, or if they're persistent about their selling, it's going to impact the markets, absolutely. And so that became the question, because you can't really understand those nuances just looking at the tick by itself. So it's about extremes, but it's also understanding how long are extremes. And there's also two levels. There's a zone of what I call persistence, and then there's a zone of what I call extreme. And while extreme is obviously, if we're at the upper extreme levels, obviously, that's going to indicate higher prices. But a lot of times we don't get the extreme levels, and what we do is we hit the persistent zones, and you can actually get the same price action like that, and you just don't see this on a chart. And it's the same thing to the downside. We want to know when institutions are not letting up on walk up or walk down days, okay, or when the moves are going to be quiet but persistent. And if you're using levels like pivots or quant pivots or voodoo lines, and we're rallying up to one, we want to be confident that if we're going to fade it, that it's going to roll over and die versus blowing through it. Okay. The tick, if it's read right, can give you all of that information. Okay. So now let's go back and look at this chart. This is the extreme, big move down, big move up. And if we look at this, now, by the way, we have cleaned this up since then. So I'm going to show you the kind of the new and improved version. But if we're looking at this initially, I think some of the things that I want to point out, and that I think that are important to understand, is that in this case, when we gap up, okay, the market's gapping up, and you can see what I call two levels of lights, okay? Level one is the persistent. So if you see these purple dots, it just means that there's persistent buying, okay? If you see these upper orange dots, it just means that there's extreme buying. And if you get extreme buying plus persistent buying, you're just going to keep going up and up and up and up until this goes away. Now, it happens on this particular day, and you can see it was typically, like an economic report or something like that. It started to sell off. But what's interesting about that is in a normal market, when you sell off, you don't generate extreme readings. But in this case, we almost immediately got extreme. It's hard to go from this to this quickly. We got extreme persistence and extreme extensions. And when we see this, this is what a walk down day looks like. And in fact, the fact that we cannot, this white line here can't get positive the rest of the day, and you're spending most of your time in the persistent zone and the extreme zone, this is exactly what a walk down day looks like. And this is a day, sometimes we'll say, hey, be careful about shorting in the hole, meaning don't short at the lows. On a day like this, you short at the lows and you keep shorting at the lows because this market is going to keep going down as long as that's happening. Over here, we had kind of sideways action, and then it started to move up. There's an announcement, something like that. How do you know it's not going to just roll over and die? Well, here you go. There's no way this market's going down as long as you have persistent buying plus extreme ticks. It's impossible for the markets to go down in that situation. And you can see that we just keep going up right into the highs. Okay, so that's an example of an extreme version. Yeah, and we'll look at this. Can you use this on ES? Absolutely. So generally when I'm looking at this, I'm trading SPX, sometimes the S&P futures, rarely SPY, but SPY as well. It'll work on a lot of underlines. All right, so that's kind of the general thing. And now here's another example. This is the same chart, but just again showing you, like when you get this, there's nothing. Again, a day like this may only happen once or twice a year. But if you knock it out of, if you recognize this and you can confidently hold your positions through this, the gains that you're going to have will dwarf, almost all your wins of the prior 60 days. That's why this is important. What I've learned in trading is that, if you've got the discipline and you've got the position sizing down, you can kind of grind it out. You're grinding it out, you're grinding it out. I have thought, though, that there's another way to trade where you absolutely do nothing except on days like this. You're just flat. You're sitting around waiting for these bigger moves. That's how powerful they are. And when they come, you're ready, right? Now, of course, I want to do some trading, but that's just how powerful they are. You could only trade these days if they happen 3 to 5 days a year and meet your goals for the year. Okay, that's how important they are. All right, so we need to know how to interpret the nuances of the tick, whether there are no levels lighting up or if all levels are lighting up. Okay. This is super valuable information for all trading situations. But most importantly, clear guidance is important because this essentially, as a trader, this is one of those days you can't afford to F up. Okay. This is like on your wedding day. You need to be there on time and you need to remember the ring. Okay. You cannot F that up. As a trader, if there's a walk up day or a walk down day and you're not zoned into that, you're not honed into it, you kind of have one job as a trader and you just messed it up. Okay. And look, a lot of times people are scared by these days because you don't see them enough. They don't happen enough. It's like, oh my God, what's happening versus recognizing what's happening and taking advantage of what's happening. Okay. All right. Couple of other examples. And I want to show you some of the new improvements that we've made since I did this last week. So another good example here. So on this day, S&P's opened up with a slight gap up, and you can see almost right away we got the persistent selling light up. Okay, and when that happens, you're just going to start moving your way down. Now, what I want to show you right here, this is a big move here. This is like a 25-point rally. Okay, and during this 25-point rally, there was no light ups up here. There was no light ups up here. And then this line here barely got above zero. Okay, and so when you see that on this kind of a day, typically, um, you know, it's going to fail. I mean, it is going to fail. And then we just kind of start working our way lower again. So on a day like this, again, I always like to buy some out of the money puts just in case we just absolutely get destroyed. And in this case, from 59.60, we ended up at 5,900. So, usually at this point, you could go 25 points out of the money. Those puts are probably $2. Okay, that's one way to do it. And then also you're just selling call credit spreads, selling call credit spreads, selling call credit spreads. And you can feel safe doing it because, yeah, you get a little bounce like this. It's like, oh my God, oh my God. But if you don't see any lighting, okay, like lighting, this is what I mean by lighting, you're safe. Okay, you're safe. And then of course you want to see this roll back down again. Okay, so that's all great and all. So since last week, we've had a lot of questions and feedback, which produced some aha moments. So aha moment number one. There are times, and I think this is really important. There are times when most of the market is quiet, according to the NYSE tick, which we have affectionately called the turbo tick. But the market still has a solid move up or down. So what is happening on this day? What's happening on this day is that these are called the Mag 7 days. All right. And of course, the Mag 7 now could also include a couple of other stocks like Oracle, Broadcom, et cetera. But, if there's money flowing into the Mag 7, NVIDIA makes up 8% of the S&Ps by itself. If there's money flowing into the Mag 7, the indexes are going to go up. If there's money flowing out of the Mag 7, the index is going to go down, even if all the other stocks are quiet. Okay. So that's actually a thing that I noted. I did not notice that when I did this last week, in terms of using this as a tool, and now have looked at that and said, oh my God, we got to look at both of these at the same time. It's so important. In addition, the Mag 7 tick moves the fastest, and the Mag 7 tick tool can catch turnarounds the fastest as well. And it's absolutely the Mag 10. Yeah, I agree. Okay, so let's look at this. So there's a couple things I want to show you here. First of all, choppy days. Okay, on a choppy day, you can see as we look at this, there's hardly any coloring. Okay, this was the prior day into the close. I think maybe it was a gap up. There's just one little thing here, but typically what I found is when you get three gray lines in a row, there's zero gas in the market. Okay. And yeah, you're going to get a little here and there and a little here and there, but mostly what you're seeing is gray bars, specifically gray three in a row. If you get three in a row early in the day, it just typically means there's nothing happening, and that's a great day. And typically what I like to do is if I'm going to do an iron condor, iron fly, I like to do it around 10:30 and then take it off around 2. And if we get into 10:30 and I see like patches of three gray bars in a row, that's the day I'm going to do it because there's no gas there. But by 10:30, there's still a lot of premium to catch. And then typically, if you're doing 25 wide, typically you're doing it at 15. And if you're doing something like this, maybe you buy it back at 12. Okay. If you could do 50 wide and capture more premium. And this is on low VIX days. If the VIX is higher, it's even better. And you can see it here, same thing. We're going along, and by 10:30, oh my God, we got blocks of gray bars, and nothing's happening. And you just do the same thing, and you can see there's zero color happening to the downside, zero color to the upside, and it gives you the confidence to hold on to those iron flies. All right, so that's the first thing, and I found that that's super important because you can make a nice living selling iron flies in the SPX, especially 0 DTE, because you got that rapid theta decay. But man, how annoying is it to do that and then the market just like takes off and rallies 80 points. And what happens on a day like this is you get distracted and you start trying to manage the iron fly instead of recognizing that there's a walk-up day happening, and selling some put credit spreads and buying some calls, right? And so that's the idea with this, is to recognize what is happening. Have no question in your mind what's happening at this current moment. Okay. So that's what we're looking at here. Now, the other thing here is if we look at now what I've got here, here's the S&Ps, and I've got the turbo tick up here, okay? And below it, I've got the Mag 7 tick, and that's just literally Apple, Amazon, Google, Meta, Microsoft, Nvidia, Tesla, okay? And it's just measuring the ticks. Are all 7 of those stocks making new highs right now, meaning that they just traded at a price higher than the previous price, or are they all making new lows right now? Okay. Or, some are making highs and some are making lows. Obviously, if they're all making highs, okay, you're going to get something like this. And if they're all making lows, you're going to get something like this. What I've found about this, of course, because the Mag 7 makes up such a huge percentage of the indexes and there's only 7 stocks, this is much faster than this one. Now, the good news is, of course, if there's a day, on this particular day, man, you got the persistent lights lighting up and the extreme lights lighting up. Index is going to go nowhere but down on a day like that. And the Mag 7 is also showing that as well. Okay. Now, you're going to get a little bounce here and it quickly dies. That can happen, but extremes are extreme. And so these two often work together. If there's extremes to the upside in the turbo tick, there's going to be extremes to the upside in the Mag 7. Okay, so that's not a surprise because you're not going to necessarily see any big moves in the indexes without that. So on extreme days they work together and it's great. Here's where it gets interesting. Okay. There are some days, so look at this. Market closes at 65.10, gaps down 20 points, and then falls another 50 points. And if you come over here, there are 0 readings in the turbo tick. Okay, well, how can that happen? What it means is that on the NYSE exchange and in stocks in general, there's just not extreme selling in the broader indexes. Okay, so why did we drop 50 points? Oh my God, look at the Mag 7. The Mag 7 is getting destroyed. So this is what I found that's really cool on something like this is that you can have something where the indexes aren't doing much. And I've commented on this before in the room going like, man, the markets just keep falling and the ticks aren't doing anything. Well, it's because it was being led by the Mag 7. And I'm not sure why it took me that long to, put 2 and 2 together there. But what's beautiful about this is that you can see right away, man, if the Mag 7 is doing this, we're going nowhere but down. Okay. Now, conversely, if the selling in the Mag 7 dries up, then we just bottom out. Okay. We're not getting any buying. We're not getting any selling. Great. We're just bottoming out here. Okay. Sell puts, et cetera, et cetera. So that's something I found. Um, um, that's something I found is super, super helpful. Okay. Yeah. Well, yeah. It's funny. You trade for a long time and it's like there's things that I think intuitively are obvious, but when you quantify them, it's just like, oh my gosh, why did I not quantify this earlier? And I talk about, and I'm much more into quantification these days because my kids ask me, and my son brings his friends over, like they want to learn how to trade. And I know if I start talking about intuition and stuff that I've watched for 15,000 hours, I'm going to lose them. I need to be able to point at a chart and be able to translate my intuition of 15,000 hours of research into like, look at the pretty lights. Okay. And that's what I mean. And so on something like this, this to me is just invaluable because it gives you that little extra, like, oh my gosh, this is really what's happening in the market. Yeah, the broader averages, they're not selling off, but the Mag 7 is selling off. And what's that going to do to the indexes? It's going to take them down. Okay. They're so big. All right. So this is interesting. So on this particular day, you can see we gap up. So this is always the question. We gap up, and then from here, we're going to fill the gap, or are we going to be a gap and go or a gap and crap? And that's always the eternal question of the gap. And there's really not been an easy way to read that poker hand of the market. Now, what's great here is you see that the turbo tick, man, it's telling you, you know what? This thing's going higher. Okay. And guess what? Mag 7 is also telling you it's going higher. And so on a day like this, when it's gapping up, instead of sitting there going like, okay, I'm going to fade this and look for a gap fill, or gosh, I owned calls overnight. Do I need to hurry up and panic and take the profit now? Or can I hold on a little bit longer? This is like another 30-point move. And so that's where I find this invaluable. So if you're seeing the bright pink extremes combined with the persistence, you can sit back and relax because this market is going higher. The calls that you have, if the stock is moving with the market, or you've got calls on the index, they are going to move higher. So now you kind of have this confidence that it's like, okay, I don't have to panic here. I don't, oh my, it's like, it comes down here a little bit. It can be nerve wracking, right? But when it's coming down, it's doing this. You buy, you buy, you buy. And Mag 7 is supporting that. And then what's interesting is toward the end of the day, we're just kind of hanging out between these two quant pivots. And it's like, oh God, are we going to sell off into the close? There is zero selling pressure. Okay. Now, there's not really a lot of buying pressure, but guess what? There's not a lot of selling pressure. There's no selling pressure. So what happens in this is, remember earlier when we talked about the entire day, it was a gray bar day. Well, sometimes in the market, you have gray bar periods. And so something like this where you gap up, you keep going, Okay, you gap up, you rally another 30, 40 points, and then you trade sideways all day. And that's what it's telling you there. So great, take profits, sell an iron fly, whatever you want to do there, but the move is over. Okay. And that's what's kind of refreshing about this. Um, these are my favorite days by far because typically when markets move down like this, they move down a lot faster than they move up. So I watch for these. Like anytime there's a gap up, and sometimes I get overly excited, like, oh my God, this thing's going to fill its gap. So we gap up, and you can see during this gap up, 5, 10, 15, 20, 25. So the first 25 minutes, we got a lot of buying pressure. Okay. So we're just a lot of buying pressure. All right. We're just kind of hanging out. Great. If you've got calls from overnight, you still hold them. But then, you start to see this start to falter. And what happens is while it takes a little while for the NYSE to start to register this, the Mag 7 is much faster. Okay, it's much faster. And so right around here, like, oh my, oh yeah, we need to get out of longs, go, possibly go short. We're gonna at least fill the gap. And then, and this thing goes from, this is a 100-point move. And so what's great about this is that you can see, like, God, the Mag 7 is getting hammered here. Okay. And then from there, there's just no buying. No buying. Right. So these days, I think you can make some of the most money on these days because you can buy these cheap puts. This is the day where you're buying puts at 3 and they go to 30. You only need a couple of those a year, right? And it can work out pretty good. So that's what I like about that. Another example here, of course, the opposite is also true. And you get a gap down, and it's like, okay, look at this gap down. We gap down, and almost immediately Mag 7 goes bid. Okay. Now, TurboTix doesn't do anything. TurboTix is not our friend in this situation because the broader averages aren't doing anything. Okay. By the way, you're only going to get a serious walk up or walk down day, like a 2% day, with the entire indexes are participating. So that's important to understand. But on a day like this, Mag 7, we gap down, Mag 7's on fire, the rest of the indexes are quiet, and the S&Ps are able to rally 60 points. Okay. Not a lot of buying on the broad indexes until later in the day. By the way, that's great when you see that. That's a bonus. But here, there's nothing. The turbo tick doesn't help us simply because why? The broader indexes aren't really participating this day. So on this day, if you're like, oh my God, I'm going to sell an iron fly here, you're just going to get destroyed. However, if you were looking at the Mag 7, you're like, oh my God, the Mag 7's on fire. Let's not fight this. So aha moment number one, of course, there are, we already talked about that. And okay, so here's the other one. So this is what the slide was supposed to say. The slide was supposed to say, by the way, Lorna played around with this and figured out that you can do ticks on individual symbols. Okay, now they're a little whack sometimes because it's just one stock, but it's really super interesting. So let's take a look at this. So here is CRCL. Now, you do have to go in and say, yeah, you got to type it in, CRCL. I want to see ticks on CRCL. And now you can see on this day, I mean, look at this. So it gaps up, and it's like, all right, is this stock going to gap and go, or is it going to gap and crap? And you can see from the get-go, it's just falling. It's falling. It goes negative, and it's just negative the rest of the day. And that's super valuable information because it's showing you the underlying composition of it, right? And so that's what I like. That's what I like about this is that, again, the individual stock tick, it's going to be a little, it's going to be a little kind of all over the place, but it's really good on those extreme situations. And you can see if we're going to gap up and go, then what's going to happen is that you're going to see persistent high tick readings. And in this case, almost immediately it falls and goes negative and stays and goes extreme negative super fast. And this is a 5-minute chart. This will go even more negative faster on like a 2-minute chart. So that's kind of cool. So this is something, and now I don't have a chart of this. I know Lorna's been doing this on gold futures and likes it on that as well. Okay, so that's what's cool about this is that whatever you trade, you can put this on and kind of get a feel of what's happening. Here's Tesla. I thought this one was interesting because Tesla gaps up, and we're all like, all right, is this going to be a day where Tesla just goes up forever? And you can see that, okay, it does come down, and we get some extreme selling. In fact, it takes that out, but then immediately kind of goes back higher. Okay, so then, again, tricky day. You gap up. Do you hold on to it? But at least it's kind of like it's giving you information. And then when you don't see any extremes, guess what? The stock is just going to trade sideways the rest of the day. No gas. And I think that's just as important too, because if you like own calls that expire that day and there's no gas, right? That's going to give you some valuable information as well. Nvidia. So Nvidia gaps down, it gaps down, immediately goes extreme bid, and gets even more extreme bid. Okay. If you're a day trader, you're looking at your list of stocks that are gapping down pre-market. You're like, man, Nvidia's gapping down. Should I buy it? And at the very open, it goes max bid. Oh my God. Like, okay, yes, let's get some of that. And it goes from like 172 to 178 in 5, 10, 15, 20, 25, 30, 35, 40 minutes. There's harder ways to make a living, but that's pretty good. Okay, so that's kind of the genesis of that. And if I can drag this over, SPX, today, if we're looking at it, this is it was kind of quiet. We did have some selling initially, some selling in Mag 7. But notice that when we got here around 6,700 or so, Mag 7 went max positive, and that was it. Now, we didn't get much happening today here until later in the day, but once Mag 7 goes bid, the selling's over, and then we just kind of, it was a quiet day, right? But we just drifted up after that. Okay. The other thing you can do is, this is an example I showed last time. Of course, now we'd want to add the Mag 7 indicator as well. And you could also, of course, add another one that just has meta if you want to look at all of them. But of course, if markets in general are well bid, your favorite stock's kind of well bid. And so the last week I was looking at this with just the turbo tick indicator, but now we could actually look at the Mag 7 indicator. We could also add the meta tick by itself as well. Okay, so now all of a sudden, we always talk about triple squeezes. If you got a squeeze in the QQQ, and then you got to squeeze an app in in XLK, and then you got to squeeze an Apple. So all three are squeezing. Typically, Apple's going to have a big move. Well, what if you look at, you got Meta here, and you look at this in the Mag 7, and then you have another, the third. So you could have three ticks all confirming, and just like, oh my gosh. And so there's some interesting things you could do with this. You couldn't do this on 50 stocks, but if there's one thing you trade, maybe if you trade like SPX and Tesla, you could absolutely do it on those two. And so that's what's kind of interesting with this. Okay, so these are just, again, some examples. I'm really fascinated by just the idea of, man, you gap down and you just die, because those days are hard if you're not, if you're not ready for it. And when you see this, you just understand exactly what's happening. You just get short, you chase it, you buy puts, you chase it, and you can do that until you see like these purple dots, right? Because that indicates strong buying. And on a day like this, it just doesn't happen. And then later in the day, there's a little bit of rally and you can see and all that kind of stuff. But again, just another example here. So just showing multiple examples. Starts off kind of strong. All right, great. Is this thing going to go? Immediately we go negative. Remember, that's this persistent selling. It's not extreme selling, it's persistent selling. And you can't really tell when you're looking at the tick, but it's effective. And then it goes from persistent to extreme. When you get these two together, it's just look out below. Again, just easy to look at there. And this is something that we'll talk about during the class and the live trading, is how to kind of time this. The 2-minute, it's a little more reactive. Once you kind of see this light up and the lights go away, a lot of times that's also the bottom. Okay. Again, a couple things like that, just try to keep it simple. So I'm completely fine using this turbo tick signal as a standalone indicator. And of course, it goes without saying that it works very well in conjunction with some of our standard tools, especially as it relates to day trading SPX, SPY, S&P futures, etc., and also Mag 7 type stocks. I have found so one of my favorite tools is the quant pivots. And, oftentimes markets, 70% of the time they're going to stay within L1, and then 20% of the time they could come down and test L2, maybe even 15% of the time. So when you're coming down to L1, a lot of times it's like, okay, well, maybe I should sell put credit spread here. Not like this. You're not. If you see this thing is going. And then finally, when we get down here, you can see it starts to level off, right? And able to do that. So again, what's great about this is it gives you the confidence. It's like, okay, we're drifting down here. Maybe I should buy calls. Absolutely, you should not buy calls. Now, if you come down here and, it's just gray bars, yeah, you buy all the calls you want, because guess what? There's no selling pressure. There's no selling pressure. Okay. So I think that's something that's pretty good. If you're familiar with quick hits and the trend rotation, it's a great complement to that. Something I find, it's just you can look at that same thing here. It's like, all right, great, these are coming down, and then just remember this is just a lot faster. So it's actually a great combination that works well with that as well. Complements Momo very well, of course. That's probably no surprise. And you get a situation like this, and you're coming down to L1, and you got these extreme levels. Man, when you see this turn yellow Momo, let's go, baby. And you're not really surprised, because when you have this, Momo is possible, right? So it just goes with all this stuff, which is pretty amazing. So while this tool is designed to maximize day trading opportunities, it's also useful for managing swing trades in stocks like the Mag 7, etc. So let's just say that one, you remember that one where it gaps up and then the market sells off 100 points. Well, if the market gaps up and you've got a lot of profits, you're kind of trying to decide, well, is this market going to keep going? Should I hold? Or if you start to see extreme selling, yeah, man, take profits, especially if you're like near your targets, and potentially turn around and go short. So it's a way to kind of manage your swing trades. I think the biggest mistake people make on their swing trades is they get in here and they got to stop, and then they got to target. And if it gets here, they're just like, well, here's my stop, here's my target, and it could turn all the way down and get your stop. So it's important to be able to recognize that the market has changed. Or conversely, let's say it gets here, but the market gaps up and you got screaming buy signals. Okay, well, remove your target and just say, I'm just going to stay long until those signals go away. So it is a way to manage swing trading, even though it is a day trading tool. It helps you manage your swing trades for that particular day. Yeah, Meta, good example here. We talked about this one, same thing. You get a gap up and immediately you're seeing selling, 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 all that kind of fun stuff. And I think I was trying to see if, okay, so that was that. The other part I wanted to talk about on this, and I talked about this last time, but I found this to be really helpful. So if you'll notice on these charts, I've kind of got these trend labels, because yes, in addition to all the selling pressure, I also want to know, like, okay, well, and of course this is as of right now, what's the hourly trend? What's the 30-minute trend? What's the 20-minute trend? What's the 15-minute trend? And if they're all red, and obviously on a huge down day like that, you're going to see that. But what's useful on this, if it's, let's say it's falling, and then you start to see that turn green, and then that turn green, and that turn green. It's like, okay, this thing's turning, and it works well in conjunction with this, because that's also showing you those trends on the larger time frame. And all right. Yeah, so I remember looking at this, and we were looking at CVX at the end of the day, and you can see, like, yeah, it gapped up strong, but by the end, you could see that all the trends started to roll over. Now these ticks in this particular case is the turbo tick, so the market and CVX were moving together, and of course you could add the tick for CVX. That's probably a little overkill, frankly, but these trend tools actually will help you read it as well. which is kind of nice. So it's kind of nice bonus with these. As we were doing this, we're trying to think like, well, you can't really look, the tick is the tick. You can't like, oh, it's the hourly tick. Well, if you put up an hourly chart on the tick, it's still the tick. It's not like a higher time frame like it would be like with a moving average or something like that. So we thought that this was just kind of a nice way, a clean way, an easy way to see the actual trends on all the time frames as well in conjunction with those ticks. And then, of course, in this particular case, when you've got green all across the board and, on the stock that you're trading, that's a good sign that this thing is turning around and starting to go higher. And indeed, in this case, you can see that the market is also going higher. Okay, so just kind of a little bonus there I thought was cool and something I've found very useful. A lot of times in trading, it's just really it's being able to synthesize and utilize a lot of information, but be able to make judgments quickly. And that's the goal of all this. All right. Okay. So just a couple more examples. And this is really where I think it's interesting is that, we showed a lot of extremes. If you see a lot of gray and no extremes, great. 66.50, you sell that iron fly. And, you can make a good living doing that. 49ers 14, Rams 0. All right, I said I'd try to finish by 8 so we could all go watch some football. And this kind of stuff, you could especially with SPX, you can sell spreads, anything like that. And it's what's great about this is that you have a tool to manage it in real time, and I think that's just the most important part. Okay, so while my inspiration for this tool was not missing out on those handful of key days per quarter, what really happened with this, while kind of exploring this, is that we also found a tool that's great for choppy days, okay, because it identifies those. And as a bonus, we figured out that the Mag7 tool is actually something that can give you market direction when the rest of the stocks aren't even moving, because there's days when the tick's doing nothing, but the market is moving. Okay, boom, that's the Mag7. And then as a last bonus, you can actually get the tick of the individual stock or even futures market that you're trading. And I found that to be a really surprise because that's not something I even knew you could do. So thank you, Lorna, for figuring that out. So what we're going to be doing is I've got these tools if you're interested in them, but I'm also going to do a class and kind of show you how to use them. So during the class, we're going to learn how to read the tick tool, and we're going to be focused on the turbo tick for general market conditions. Mag 7 heads up, is the Mag 7 driving the market this day? Is the Mag 7 kind of turning around? We're going to talk about chop days versus trend days, normal trend days versus that rare walk up or walk down day. And more specifically, because at the end of the day, you got to know how to trade it. What are some specific chop day strategies that I like to use? What are some specific trend day strategies that I want to use? And then what are some specific walk up or walk down strategies I want to use? Now, if we're doing the live trading, of course, I'll have a presentation, a more detailed presentation on this. And then if we're doing live trading, if there's not a walk up or walk down day that particular day, I could certainly still talk about and show examples of what I would do. But of course, we would focus on, what, because it's going to be one of these 3 days and there'll be a strategy. And so the goal will be, how do we identify as soon as possible what possible day it is? And then 2, what specific strategy that we do. And this will be focused on day trading. So typically on that, we'll be looking at SPY, SPX, ES futures, in addition to NASDAQ, and then, some of our favorite stocks, Tesla, NVIDIA, and things like that too. And so that's what we'll be focused on. And from there, also, as you saw with that last improvement, is how to use the tool on individual stocks, how to trade individual stocks with options and the tick tool. And it really focused on playing gap up and gap downs. Okay. And with the Mag 7 tool, we can catch those turns faster and then know what the big moves look like and how to play them with specific kind of checklists on each particular situation. Like if you see this, you do this. And if you see this, you do this. Okay. So at the end of the day, and I always like what I like about something like this is that if you're dialed into this and you're not revenge trading, you're not trading to alleviate boredom, you kind of have these, you grind it out. Obviously not every day is a winner, but if you're grinding it out, you make some capital, and then you kind of have this big day. It's like, wow, the market was up or down, but you caught it. And then you go back to grinding it out, and then boom, okay, another big day. And that's really the key with this, is just to be able to identify the stuff when it's happening, recognize it, close out stuff that's no longer in alignment with what's happening on that particular day, and get in alignment with what's happening on that particular day. Okay, and it means really letting go of the outcome. Yeah, you might have bought that stock yesterday, and you might think the swing trade is going to do great, but that's telling you that it's a walk down day and everything's getting hammered. It's okay to change your mind. Don't get married. Okay, don't get married. So that's the whole thing. Kind of being in flow with what's happening. Okay, so if you are interested in this, I think this is going to be a fascinating and great class. You can go to type in simplertrading.com/ultimate, and there's going to be 3 basic packages. The first one is that you will get the tick oscillator indicators, and this is all of them. Okay, so you're going to get the turbo tick, the mag 7 tick, the individual stock tick, all of them. Okay, it's a great deal. Also, we're going to do, instead of a Saturday class, we're going to do it during market hours. So what we'll do is we'll trade for like an hour and a half, and then we'll do kind of the class, take a break, and then we'll come back and trade the close. As a bonus, you'll get the sandbox strategy class. This is one that I use with the quant pivots. Now, if you've already got the sandbox strategy class, you can say, hey, I got that one. Is there another class that you did that I can have? That's fine. The reason I wanted to do this is that there's a lot of, it works really well with it. And it works for it. I kind of think that if you're trading the SPX, you should have the quant pivots on there. And so the sandbox strategy class kind of explains it in more detail. Okay, so with the 597, you're getting these 3 things. Okay, let me just redraw that. So you're getting this, this, and this. Now, with the Pro version, in addition to getting this, this, and this, you're going to get those trend rotation labels. Okay, so what are those? Those are the labels that you can have up here. And they just kind of help guide you on multiple time frames what's happening. Okay, and that's cool because that's before we couldn't do that with the labels. Now they have labels, and that's pretty awesome. So in addition to this, this, and this, you're going to get those and 2 days of live trading. And we'll have them, I think like 10 days apart in October. And then if you really want to dial into this, the elite version, you get all of this plus our live event. Good friend Tom Sosnoff is going to speak at our live event. If you do not know already, Tom Sosnoff is retiring from Tasty and is going to go off on his next adventure, but he did agree to go ahead and come speak. Might be one of the last times he's speaking at our event. If you've never seen him talk, he's a brilliant and funny man. He's been a mentor and a friend for 15 years, and I'm super excited that he agreed and to do that. So that'll be awesome. And then we're gonna have a poker tournament that evening, and you put in real money. And if you've never, I know these days is like traveling is hard and stuff like that, but this is one of those things where it might be the last time you get to see him speak about trading, which is cool. Plus, if you're sitting there and you're trading behind a computer screen all day and you haven't really interacted with a lot of other traders, a lot of times people come to these events and they make lifelong friends that actually have similar interests as them, and which is pretty cool. So that's going to be fun. And that'll be really cool. My Tesla on FSD will get me there. That's okay. And then just kind of going through real quick, just what this is. So the live event will be Friday, November 7th. We'll be trading all day. Myself, Henry, Sam, we've got a couple others coming down. Tom will be there. This is the room it'll be in. It's a great room for trading. And then now, as a bonus, everybody that does this, you get $1,000 store voucher to use toward any course or indicator. There are some exclusions, but mostly anything that I created, you can use it for. I think that's cool because that's just a way to say like, oh my gosh, especially if you're newer, it's a way to kind of maybe get some of the indicators that you might not already have. So that's really cool. And then the poker tournament's a lot of fun. Even if you've never played Texas Hold'em before, I highly encourage you to play. It's like a $50 or $100 buy-in. It's real money. But what happens is you learn money management skills. You will learn better money management skills for trading playing Texas Hold'em than anything else. It's pretty fascinating. know when to hold them, know when to fold them. And then the live trading, yep, live trading, we talked about that. The first one is this is the actual class. So we're going to do the class on October 9th on a Thursday versus doing it on a Saturday, because who wants to do this on a Saturday? But we'll start off with live trading. We'll go through some specific strategies, and then we'll also trade the close. The 2 days of live trading we're going to do on Wednesday, October 15th, and then also Tuesday, October 28th. Now, those days could change, but I would say that's 90% going to happen. You know, things can pop up like that, but at this point, they are raring to go. For those of you that don't know, you know, if you were like, wow, I want to go to the live event, all this kind of stuff, we do have an agreement with PayPal where you can, you know, if you click PayPal, there's an option where it's 6 months, no interest payments. You know, it's, you know, you get it, then you can pay later. Some people then make the trades and pay it from there, and you know, doesn't happen all the time, but it's kind of a nice feature there. And then there, yeah, so there you go. So that's what we got. Simplertrading.com/ultimate. Let me actually bring up the website and let's see what's on there. And I'll just drag it over there. Um, yeah, yeah, and Lorna, some of these are available, or all these available for TradingView. And yeah, so there's everything there. Makes sense. And for the bonuses, keep in mind, there's that $1,000 credit that you can use here, which is, so it's kind of interesting. So in a way, these two are kind of the same price because you get $1,000 credit, you know, on this one, which is kind of cool. And that's just for a limited time. We just thought, hey, that would be kind of cool. And poker tournament. Anyway, everything's on the page there, so that's great. Are the prices annually or a one-time purchase? So it's a one-time purchase. If BJ, if the web link isn't opening, sometimes when a lot of people are clicking, it can take like 10 to 20 seconds. It might just sit there and be thinking. All right. Well, I'm super excited for you guys to try these out. And, you know, we'll be watching these tomorrow. It's really fascinating. Just to kind of, you know, you watch this and, you know, it's like, oh my God, the market's gapping up. Is it going to rip today? And it's like, man, Mag 7s, you know, everything's getting hammered right away and you can see it. But then you can also see when the selling stops. So it's like, it kind of takes a lot of mystery out of the market. Yeah, good question. I see a lot of people asking, what are the ticks? So the tick is a tool. The base case of the tick is it's a tool designed to measure the buying pressure or the selling pressure of the stock market as a whole. So if you know, if all stocks are going up, like there's a buy program, then you know you're gonna see like this. Okay, you know, you're gonna see these little colors here, and then if all stocks are getting hammered, you're going to see stuff like this on the tick. So um, what's great about it is it's a direct read. It's the fastest read of the market you're ever going to get. The problem with the tick by itself is that the tick by itself is hard to read. I've happened to watch it for a long time, so I understand the nuances. You know, you might not get an extreme reading all day, but the market goes up 50 points. You know, it's like, okay, well, how did that happen? So that's what it is. And so the tick is something that, you know, a lot of people don't even know about it. But it's like I can't even imagine trading without it. Like that's how important it is. And the reason I'm familiar with it is that I cut my teeth day trading the S&Ps, you know, back in the 2000s. And I literally would just watch like a 5 minute chart in the tick, and that's it. And so you really just kind of learn to read it, understand it. What does it look like on these crazy days? But you still couldn't understand like the nuances. I could never explain the nuances of it. And so that's what this tool does is it dives in and says, okay, this is what happens when we see persistent but not extreme selling. This is what happens when we see persistent but not extreme buying. This is what happens when it's going to be sideways. We're going to see these gray bars. This is what happens when we have a walk up day, when we have extreme plus persistence, either up or down. And the tick, to me, looking at the market, without the tick, um, it's like driving with a blindfold on, or it's like driving with dirty windows. It's just going to be hard to see. And then you apply that windshield wiper fluid to your window, and it's like, oh my god, I can see. And that's what this is. You can actually really see and understand what's really happening in the markets. And I just it's a valuable tool, and I've been struggling to explain it to my kids because it's really hard to explain the tick unless you've watched it. Probably, oh yeah, I've watched it for 10 years. Now I finally understand it. Now I can just say, look, just look at this, and if you see these red dots, guess what? We're going higher. Yeah. So, and I do know that the link. Again, if you click on it, nothing's happening. Wait about 30 seconds. It took me about 30 seconds for mine to open. Sometimes you get a lot of people opening it, clicking on it at once. And of course, you can always call or email us. We will have the indicators available in a couple of days. I believe October 5th. There's some final tweaks, little stuff like that we've been making. So I'm so glad we held them back, because imagine had we released them last week and then discovered all these things. I'm like, all right, guys, you need to download the update. I would much rather have the one that you get be the final, or as close to the final version as possible. October 6th. Okay, great. All right. Well, I'm happy to answer questions. I did want to respect everybody's time because I know there's great games on tonight, and I will leave this up. And again, I think if this is something that even if you're familiar with the ticks, but you've never looked at it like this, or you've never heard of the ticks, um, at least, at the very least, I think your investment here, the ROI on this, is it 10x every year for the rest of your life? That kind of thing. I mean, if you think of this as an ROI, just by learning to read the markets like that, it's super important. And then if you're kind of like, well, God, I do think, and the reason I like to do the live trading, and by the way, if I didn't have confidence that this stuff worked, I would never live trade my own account in front of you guys, right? So I'm totally fine doing that because I'm super confident in how they work. But I also think that that's the best way to learn. I can tell you in theory, look at this PowerPoint slide. But when you're in the thick of it and we're having to make decisions real time, that's really when you learn. It's like swinging a golf club. Okay. And then the actual class. So you'll get these tools on October 6th. And then yeah, let's try that again. Using my mouse. And then this is going to be on October 9th, which, instead of a Saturday, we decided to go with a Thursday. So we could actually, you know, teaching an intraday indicator on a Saturday when the market's closed, I just started thinking that makes no sense. So this way we'll all have our Saturdays free too, as a bonus. Yeah, no, Patterson, I agree. Patterson is saying, hey, the tick is a leading indicator. This is a breakthrough indicator, in my opinion. I absolutely agree. And I'm honestly a little ashamed of myself that this is not something I thought of earlier or worked on earlier. Because I'm not really I can have an idea of something, but I don't program stuff in TOS. So, Eric's helped me before, and then Lorna's like in boss mode, figuring going like, oh, okay, well, what about this? And so the conceptually, it's like, God, it'd be great to be able to see this, because intuitively I'll look at it, but that's when I really have been noticing things, is when I try to explain it to my kids and they get frustrated and confused. And it's like, okay, I need to be able to way to take my intuition about this and quantify it. And that's really, really what it comes down to. The main difference with in this one, so there's the 2 days of live trading, but then you also get the trend rotation labels. Notice that you do not get the trend rotation labels there. The trend rotation labels are what these are. And it's just one of those things where, again, you get that little added edge. We never had these before simply because the labels is a new feature on Thinkorswim. Is it in TradingView and Thinkorswim? Yes. All right. Excellent. Excellent. Yeah, look, I think you guys and gals, I think you're really going to love this one. It's a lifesaver on those big days. You know, and on quiet days, it's telling you it's a quiet day and there's nothing to get excited about. And that's really the main thing. You know, I'd say that just the idea of understanding what's happening in the market when it's a big day, you know, that alone is worth the price of admission. But then, you know, you kind of start to understand the nuances. I love that you can add it on a chart, you know, instead of looking at it, you know, off in the right hand corner by itself. And, you know, it's able to take the things that I guess I've intuitively kind of tried to understand over a long time of doing this and being able just to point and say, you know, this thing's going down, guys. Excellent. All right, guys. Well, I'm gonna leave this up. We'll stick around, answer questions. I'm super excited about this. Obviously, I'll be showing this in the room, and I'm frankly excited for you guys to try this as well. I mean, you know, when we find something like this and we really like, you know, really just kind of see the impact it has. It's you know, it's hard to quantify like how important that is. Like you want to know if the market gaps up and is going to roll over and die. You don't want that to, I mean, you may not be you may not hope that it's going to happen, but at least now you can understand that it's happening and take action. That's really key because sometimes you don't know, right? The market's going down, it's like, oh, okay, it's going to hold support, and then all of a sudden you blink and the you know the S&Ps are down 70 points, and you know you're just sucking wind and taking no action when you could have something in front of you that's like, hey man, this is what's happening, so you need to hurry. Yeah, no, Ozzy, I think you know I'm super excited about it. I guess yeah, and you know when you guys try it out, you know, give us feedback. You know, it's kind of a new concept, so we're always interested in feedback and things like that too. Yeah, absolutely. Squeeze Pro and Momentum. Now, the reason this tick is important, and you'll see over here that we've got, and I've got another one of Squeeze Pro. I've got the Momo indicators on here. But as I talked about, especially on those big days, so the Squeeze Pro is not designed for violence. Okay, violence is a day where you know the S&Ps are up like 100 points. You're not going to get a squeeze that day. Like there's too much volatility, there's too much violence. And then on a big you know walk down day, you're going to get some yellow momentum bars, which is great, but you're also going to get some green buy arrows, which don't work on those days. And so you want to know, like, oh my god, it's a walk down day. So yeah, they're all you know the Momo. You'll notice I've got the Momo on here, right? I think it's important. Um, and then for if I'm you know so for me the Squeeze Pro RAF 30 minutes and above. You know, give me 30-minute charts, daily charts, swing trades all day long. I'm not going to look at a daily chart with the tick indicator on it. It's you know I'm going to be looking at the squeeze, you know the Momo bars, RAF, all that kind of stuff. So swing trading versus day trading. Yeah, you know, it's interesting. I think, yeah, Tom sounds like he's going to do something else. He said he wants to talk about it. So I don't know what it is. I don't know if he's opened up a nightclub or doing something else in trading, but I'll see if I can get it out of him before the Austin event or at the Austin event. Yeah. So can you tell if a breakout's going to happen? Yep. So if you're looking at the markets here, okay, we're pressing up against this resistance, we're pressing up against this resistance. Well, if you go, if these light up, if you got the persistent lights buying up in the extremes, we're going higher. We're going to break out. If it's not doing this, we're not. Yeah, it's really cool for that kind of stuff. Mayor of Chicago. I don't know if he would. I don't think he would ever want to do that. You never know. All right, everybody. Great hanging out. Looking forward to working with you guys next week on this in more detail. I'm going to sign off. I'm going to leave this page up. We'll hang out in the chat here for a few minutes. If there's any last minute questions, enjoy the rest of Thursday night sporting activities, and we'll see you guys tomorrow.